Can everybody hear that?
Yes, I can.
Okay, so I said, okay, before I even start asking the question, that which one did we do last week? Last week we did that's what we did last week now. We did our code of conduct. So which of them did we do last week? Was it the ICANN or the IESB?
ICANN.
Exactly. And that was where we got the copy from, right?
Yes.
So I was now saying that the IESB framework has more code of ethics than the ICANN framework. The IESB framework, the acronym is TOPIC. There's T. So T is technical standards, O is objectivity, P is professional competence and due care. The next P is professional behavior. We have independence, integrity, and then we now have confidentiality. So there are just two additional standards or codes of ethics in the IESB framework as against the ICANN framework. Can everybody still hear me? Hello?
Yes, we can.
Hello? Okay.
Hello, good morning.
Hello, good morning. You're just joining us, but the class has started. So, yes, it is not that it is a direct ICANN question for professional level that you'll be asked, right? But it is just important to know the difference and to know that, like I said last week, different issuing bodies issue out their own code of ethics, right? And depending on the scenario, as an institute, we can choose the one that we want to adapt and the one that we don't want to adapt to. So does anybody have any question from that? Okay, so we are 12 minutes into the class, and I think it's a good time for us to kickstart our group audit. So before I will ask, all of us, how many of us here, Abby? All of us, I want to believe that all of us here did group accounts, FR level, right? Can correct me if I'm wrong. Please, I'll need you guys to speak and respond to me. Like I said last week,
Yes,
you can,
skills.
if you're not in a noisy place, feel free to unmute because I am not giving you any notes. You're not writing any notes, right? I'm just speaking to you. It's a conversation. The best way to interact yourself in the class is just to unmute and just make sure that you're not in a noisy background and the both of us can speak and talk to ourselves. So, like, thank you for responding. So you guys agree that you have done group account as in your FR, right? And that is where you understand because I say somebody should unmute now. Somebody has taken us to the market. Oh. Okay, it is well. Okay, so now in this class, we're going to be basically talking about group accounts. Now, one of the things that I want to say is that this is not the pace at which your class is supposed to go. Personally, I like it when students already have a proper knowledge of what audit is in itself and like other intricate topics before we even get to this. But it is not a standalone that it is impossible for you to understand. So, like, me and Mr. Adesalo are taking this course. So there are some parts he will take and there's some parts I will take. So he has taken you introduction to audit. I have come to do regulatory framework and now I'm doing group audits. You understand? So just follow through. I know that they have been providing the recordings of the class. So when you are done with the class, you can just listen to the class from each topic. You understand? Okay, let me not talk too much. Let me just go straight into it. So a group audit is basically the audit of a group financial statements. So you know how you understand that companies may not be standalone, they may be subsidiaries of another company, or a certain company can be a group company, or a certain company can be the parent company on behalf of other subsidiaries. You understand? So, but yeah, we're basically talking about, okay, since we know that some companies are groups, how exactly do we audit a group company? How do we audit a company that has subsidiaries, that has associates and all of that? So please, can somebody read for us? Hello, can somebody read for us?
Okay. A group audit is the audit of group financial statements. For this topic, you need to be aware of the requirements of the following accounting standards: IFRS 3, business combinations; IFRS 10, consolidated financial statements; IFRS 11, joint arrangements; IFRS 12, disclosure of interest in other entities; IAS 27, the revised one, that's separate financial statements; and IAS 28, investments in associates.
Thank
So
you. Okay, thank you very much. So this is basically them just saying that for you to even be a good group auditor, right, you need to have basic knowledge of your accounting standards. Don't be scared. It's not like anybody will typically ask you all these standards. But it can be funny. Let me know. Let me know. Go and issue disclaimer. Then someone will say, but you said they cannot ask us. In recent times, we have seen them ask standards in AA, because they believe that for you to be a good auditor, you must understand your clients. You understand? So they may ask you a question that what are the standards that are needed for an accountant to know when they want to carry out group audits. So it can be an exam question. So they're just all the standards that you typically use for your group audits that are resurfacing for your, therefore, that is all the standards that you use for your group accounts that will be resurfacing in your group audits. Okay, so you can continue.
okay, group audits and the audits of an individual group companies. Okay, so the basic audits work for groups of companies consist of auditing the financial statements of the
Okay.
individual company in the group.
Yeah.
For audit purposes, the parent company and the subsidiaries are referred to as the components of the group. The audit of the components will follow the normal audit procedures. So this chapter is with the additional audit considerations that arise in connection with the preparation of the group financial statements. So possible problems with group audits.
Yeah, let me explain. Thank you very much. So, you see that from what you just read, they just told you that if it's an individual company, right, a one-off company that is a standalone, when we're talking about auditing that company, you just go into the company, you do your normal audit procedures, you generate your audit report, everybody is happy, everybody is fine, Abby, and you move on. But the moment we're auditing a group, there are a lot more considerations to be taken than when you're just auditing a one-off or a standalone firm, right? Okay, and what are the considerations? Simply, we have the parent company and we have components. All the components are all the subsidiaries that are attached to that company. You understand? So that is the deviation that happens when we're auditing a group. Now, in this chapter, we're basically going to be looking at the considerations simply because we're now auditing a group. What are the things that we have to consider? And the first subtopic here are the problems of or like what makes group audits complex. They can tell you what are the problems of group audits or what makes group audits complex. Number one, some companies may have foreign subsidiaries that report in their own currency. So for them to now prepare a group financial statement, a lot of conversions will be going on. You understand? You are converting a certain currency to a certain currency before you can come about the full group account. So that can cause some form of delay, or it can make the work more intense than if you're just auditing an individual company. Everybody together? Hello? Everybody together?
Yes.
Yes.
Thank you. The second one is some companies in the group may have different year end. You know how you do it in group audits now, where if, like, let's say, for example, your subsidiary end of year is June and your end of year is December, or your end of year is June, but your subsidiary end of year is December. So in your P&L, you have to prorate. You have to prorate to be able to get your P&L figures. You understand? So imagine if you now have like 15 subsidiary and everybody has different year end. Auditor but imagine that level of inconvenience in terms of auditing and all of that. That's one of the problems too that comes with group audit. The third one we have is that some group companies may be audited by an audit firm that is not the auditor of the parent company. So let's say, for example, let's be using Dangote as a classic case study, right? Dangote has Dangote cement, he has sugar, he has flour. One time he did juice, Abby. So just imagine that all those other smaller subsidiaries have their own auditor, and their auditor is not the same auditor for the Dangote as a group. Now, different audit firms have how they do their own audits, and the cost and the time that it will take to kind of make everybody liaise together can also make the audit stressful. You understand? Simply because one auditor may not have audited the group company and also the components companies. So now we're going to be looking at some terminologies in group audit. I'll basically just go over them. The first one is the group engagement team. Now, the group engagement team is simply the audit team. But because we're looking at it in terms of group accounts, it can involve more people, or definitely it will involve more people. So let me just read what we have here. I feel like these materials are actually very easy to read, to be honest. And that's why I'm really sticking to them. So we have that group engagement team is the audit team responsible for the audit of the group financial statement, and would usually also be the audit team responsible for the audit of the parents. You understand? So you're auditing the whole group, and you're you're auditing its subsidiaries. Now we have that the group engagement team will be, this is an exam question. They can ask you that what are the responsibilities of the group engagement team? So you want to highlight that in maybe your material or something. We can actually use the highlighter here. So they can. Apologize, I don't want to risk using my system for like this glue. I don't want to back and forth. Okay, but you can just highlight it in your own material that is with you. So we have that the group engagement. Did I send this material to the group? Did I send
Yes,
it?
ma'am. No.
Okay, so let's just use this. Then I'll send it immediately after the class. You get? I think that works too. Okay, so we have that the group engagement team will number one, establish the overall the overall group audit strategy. So audit strategy is the action plan of how they intend the audit to go. It contains three major things. You do that in your audit planning. You talk about it extensively in your audit planning. So it contains the nature, the timing, and the extent of the audit work. So a strategy is basically a game plan. So it is the group engagement team that's supposed to establish an overall strategy for your audits. The second thing we have is that the group engagement team are supposed to communicate with the component auditors. Who are component auditors? Component auditors are auditors for the subsidiaries. Those are the component auditors. Number three, we have perform work on the consolidation process. So definitely, like I said, all these adjustments that are made to the P or L, all these communications that you need to have with like related parties on different for different of the subsidiaries and all of that, meeting with stakeholders, shareholders. Definitely, it is the work of the group engagement team. Then they're the ones that will now evaluate all the conclusions that are drawn from your audit evidence, just to form an opinion on the group financial statements. Do you get? So that's the first terminology. The second terminology, I think I've even explained it in the first terminology, where we said component auditors. They are basically the ones. So they said, who is a component auditor? Is an auditor who, at the request of the group auditor, performs work on the financial statements of a component. So typically, usually who the component has decided to be their auditor. So let's use, for example, the group auditor is PwC, component auditor for Dangote Cement is EY. Do you get? So next up, define what a component is. What a component? A component is an entity or a business for which a group or component management prepares financial information that should be included in the group financial statement. So a component is a subset of the group in itself that is worthy, or that is what's being accounted for in the whole group's financial statements. Okay, so now we have that the group engagement partner. How typical audit engagement now. There's the partner. It's not everybody, like when they say we are signing off for an audit report. I'm just trying to, because we have not done some other topics, right? I'm just trying to bring your understanding together. When they say they are signing an audit report, if they're 36 auditor, it's not the old 36 auditor that will sign your report to. You understand? There's an engagement partner. There's a partner. Accounting firms are basically partnership businesses. So on every engagement, there's a partner on that team. So the partner is the one that basically signs off. So they are saying that now the group engagement partner, what is his responsibility? Number one, direction, supervision, and performance. Please underline the three together. Don't separate them for any reason. The first one is direction, supervision, and performance of the group audits. Then number two is issuing an appropriate audit report. So everything that he's doing in terms of his own staff, people that are on his team, is direction, supervision, and performance. But what he's doing in terms of the reporting, like in terms of their clients, is to make sure that he gives them an appropriate report. Are we still together?
Yes.
Okay, so now we have that the group auditor is solely responsible for the audit report of the group financial statement. The group auditor, therefore, cannot refer to any component auditor unless a reference is required by local law. Let me give you a typical example. Let's say one of their subsidiaries, are you with me? From the auditor's analysis, one of their subsidiaries having an issue with his going concern. Now, the component auditor has now said, they're expecting a major partnership next year. If they get that partnership, it will put them in a good financial strength and they will not be having going concern problem again. That is what the component auditor puts inside his own audit report, and he now gave them a unmodified, that's another topic. He gave them an unmodified report, gave them a clean report, right? But clearly, from the group auditor's analysis, he's saying that this company is having a financial problem that is typically affecting their going concern. The group auditor cannot say, oh, this particular component is a going concern because the component auditor said so. No, he cannot directly reference the work of a component auditor in his audit reports because he needs to take responsibility for that report. Do you understand? Quite interesting, Abby, because you can't you now say Lagbaja is the one that said so, it's not me. No, you can't do that. You have to take responsibility. And that's where even the partner on that group engagement, that's where the partner comes in. He has to take responsibility. Okay, so let's move on to materiality. Who can define materiality for us? Like generally, what does it mean for something to be material in terms of financial statements or in terms of like in accounting? When do we say something is material? Hello, somebody should define it for us. What do we say? What do we say when something is material in accounting? How do we define materiality?
Okay, so I'm trying to paraphrase, right? So if something is material when a misstatement, right? Like when if we state that item, right, it can actually change the decisions of other people, right? So is
Yeah,
material a misstatement in that item can actually influence the decisions, right, that people are going to make.
very excellent, very excellent. So basically, an item is considered what we say is materiality. We used to cram the definition back in the days. When I say back in the day, trust me, it's not that long. But we would literally cram it and say an item is considered material when its omission or misstatement can affect the opinion of its user. You understand? I think I even made this joke. I don't know. Sorry, I teach AA. I teach AAA. So sometimes I say the same thing in two different classes, so I can't forget. So I think I even said it in this class when I was like, people that say, I think it was AA, sorry. But I was saying a joke last week where I was like, people that lost their phone and say, it's not even the phone that pay me, it's just the SIM. The SIM has so many contacts and there are so many people that want to call. And you're looking at the person that, what are you saying? How can you say that a phone of like 150K did not pay you and it's the SIM that is paying you, That's the person just literally lying to themselves. So similarly, in group audits, we have different considerations, even for different type of components or components, right? So let's read it. Now, they said the group auditor will need to set, number one, the group's materiality for the group financial statement as a whole. And number two, component materiality for those components where component auditor will perform audits for the purpose of the group audit. Then number three, component materiality will usually be lower than the group materiality. Let me just give you a classic example. He can set group materiality for 10%. Are you with me? Component materiality for those components. So you can now say component materiality is, let's say, so in the whole group, if the worth of what is happening is up to 10%, we'll consider it as material. We can now say, okay, components materiality 7%. You get, and then we'll say, okay, if in your components it is weight 7% of like what is typically happening, yes. So the materiality ratio will fall more when it comes to the components. Okay, so now we have that the principles and guidelines for planning a group audit are similar to those for an individual company. That's to tell you that when you are doing your audit planning topic, it's good to pay attention, because the principles and basically the planning of an individual audit is almost the same thing. However, there are some additional steps that an auditor is supposed to follow. So they can tell you that what are the things that an auditor should take note of when he's auditing a group. Number one, he needs to familiarize himself with the client's procedure. See, this point is everywhere. When they ask you anything, and they're like, what are the things that an auditor should do in terms of his clients? The first thing he does is to familiarize himself with the client's procedure. And who can tell me why? Audits is usually done in arrears. You understand? It's at the end of the FY, right? And you as the auditor, it is not that you were there with the clients throughout the audit year. Okay, apologies. Just give me a minute. Okay, sorry, I had to drink water. I felt really dehydrated. But yes, so it is not that it is not that you were there during the company. It is not that you were there during the company's FY, and that's why it is very important for you to familiarize yourself with the client's procedure. Then you move on to ascertain the timetable for the preparation of your group financial statements. That means you are putting in place a timetable for how you want to be able to meet up with what your goal is, which is the audit report. Next up, we have that you establish an audit strategy, an audit plan for the entire group. Then you move on to planning the staffing requirements. Like how many people do I need on this engagement? Then a timetable for the audit will be done, and an action plan with possibly like action plan is usually more detailed than an audit strategy. This is how we're going to do. Week 2, we're supposed to be here. Week 3, we're supposed to be here. That is basically an action plan. Then we have the last one, arrange for communication and cooperation with component auditors. This can be the hardest part, because like I said, different companies have how they do their own things. So trying to align everybody's goals together can be very difficult. Okay, so somebody should please read for us. It is vital. Who are they calling Chibikio? But somebody can read for us from It is Vital.
Okay, it is vital that there is a clear and timely two-way communication between the group auditor and the component auditor. So the group auditor's requirements are usually communicated in a letter of instruction. Now the component auditors with the group auditor usually screen again.
I've lost the screen.
I
apologize. Will come up now. Okay, so thank you. So basically what he has read is correct. He basically said that the group auditors requirements, or the group auditors form of communication, the group auditor's requirements will be communicated in a letter of instruction. So when the group auditor wants to communicate with his component auditor, he sends him a letter of instruction. Like, I'm the group auditor here, so these are the things I require of you. And when the component auditor wants to communicate with the group auditor, he sends him a memorandum or a report of work done. That's a good place to highlight if you're highlighting. Now, in Jacob, I think your name is Jacob, right? Please, you can just unmute. I'm having a bit of feedback from your end. Okay. So that the group, incorporating with the group auditor, the component auditor will provide the group engagement team with access to relevant audit documentation. provided that it is not prohibited by law or regulation. Now, this means that for no reason would a group auditor be requiring the component auditor to give him some certain information, and the component auditor will say, oh, sorry, that's the confidential information of my client and I can't give it out. Do you get? For no reason. Because as the group auditor, he has access and right to all the books of account that are necessary for him to conduct his audits. So let's just move on. The group auditor's letter of instruction to the component auditor should set out, number one, the work required. So if he's sending a letter to the component auditor, these are the things that are supposed to be in the letter. Number one, what is the work he requires the component auditor to do? Number two, what is the use of that work? Why do you need the work? Number three, the form and content of the auditor's communication with the group engagement teams. Okay. Please, can you who are we unmuting now? Sorry. Okay, I'm not even an admin. I'm not sure. Prudence Jerry, please, can you mute? Okay. Or was it Ifeanyi? I think it was Prudence. Okay. Please, can you still see my screen?
Yes.
No. Oh, okay. Can you see it now?
Yes, we can.
Okay, so let me just okay. So it's going to tell him, it's going to also send him a request for cooperation that I'm the group engagement auditor on this engagement. I'm going to need you to cooperate with me, all of that. So maybe a letter that is basically a request of cooperation. Basically, he's also going to send in the ethical requirements that he will be working on. Let's say, for example, they are in different country. They may have different ethical requirements. Then he will send in what the components materiality is, that everything above 15% in your, like everything that has weight of 15% that is not clear to you, I need to know what is happening. Then we have identified significant risks. He needs to understand that, okay, what are the major things, what are the major highlights in this FY that we're looking at, or what are the things that we're trying to protect ourselves from? Then he needs to send in a list of related parties. And why do we need the list of related parties? Because under IAS 24, all related parties are supposed to be disclosed in the notes to the account, you understand? And they want to see basically whether related parties are cutting across multiple components. So now, when the component auditor has now taken the letter of instruction, he will respond back with a component auditor report of work performed or memorandum of work performed. You get? So what will now be the report of work performed or memorandum of work performed? I expect somebody to give me a smart answer. So what do you think will be inside his own report of work performed or memorandum of work performed? What should be there? Hello? What should be there? Suppose like just a one-line answer. What should be there? Hey. Class, so what should be there? Basically, what should be there is everything.
Okay.
What should be there is everything the group auditor has requested from him. That's what it is. So you can literally take your content of letter of instruction and write it back, right? Or answers to everything that has been sent in the letter of instruction. That is what will be in the components or report of work done. Because he's only responding to that after the group auditor has sent him the letter of instruction. Are you guys with me? But we'll still go over it. Number one, we have a statement of compliance. Are you with me? To ethical requirements. You see, based off the ethical requirement that the group auditor sends to him. Number two, any instance of non-compliance with laws and regulation that could lead to a material misstatement. Those are identified risks. Are you with me? Number three, a list of uncorrected misstatements on the financial information. Those are identified risks. Number four, indicators of possible management bias. Those are what? Identified risks. Number 5, any identified material weakness in internal control. Those are still what? Identified risks. Number 5, any significant matter that the component auditor expects to communicate to those charged with governance. Like I said, it cannot hide anything from the group auditor and say, oh, I'm protecting my clients or I'm clinical, because the group auditor is supposed to know everything about the whole group. Then we have the auditor's component overall findings, conclusions, and opinion, because the work that the company auditor has done is obviously more detailed than the work that the group auditor will be able to do on that particular entity. So a good way to know it is that as a group auditor, I'm sending the component auditor a letter of instruction. The company auditor will respond to me with a memorandum or report of work performed, right? And so that you don't I don't like you when people say AA is very overwhelming, but I believe that it is because students don't try to understand it. They don't understand the why. They just want to cram and go into an exam hall. Knowing that, okay, this letter of instruction will be sent to me, I'm responding with a memorandum. What's inside the memorandum? What the letter of instruction entails? So instead of even cramming 2 things, you can literally cram 1 thing. Do you get? Somebody is like, it's easier said than done. I'm waiting for you. Okay, so now let's move on. They said where significant risks of material misstatements on the group financial statements has been identified. These are what the component auditor. This is what at a component. This is what the group auditor should do. So let's say, for example, the component auditor has come to tell you that we are seeing a XYZ amount of fraud or a major error that's happened in the previous financial year. What is the external group auditor supposed to do? Number 1, is supposed to further evaluate all these procedures. Like, he's supposed to do more checks, right? Because of professional skepticism. You don't believe what anybody has given you for what it is. You question everything. Then the next thing, you consider whether it is necessary for those procedures to be involved. Okay, is this something that we must put in our FS? Then, and you're looking at involvement. So the reason why you will be able to consider if it needs to be involved, you look at involvement. So you look at it that, okay, you have a meeting with the component auditor to obtain an understanding of the components. You review the component's overall audit strategy. You perform risk analysis. You review other parts of the component documentation. You're basically saying that, okay, what more work can I do on this thing? You understand? What more work can I do on this particular thing? Okay. So there's even something that I'm not seeing here that I'm surprised about, but let's continue. Okay, so that will be all about group audit, although that is not all. There's a significant part, but we'll go over it. Let's just continue with this material. So the second part of this, our group audit, is what we call a joint audit. Are you with me? Everybody with me? Hello, do I have a class?
Okay. Yes.
Yes.
I'm always asking. I do online classes too, and sometimes when the speaker is just speaking and the speaker is just going, I'm like, if only the speaker know that he's on his own journey. So because of those things, that's why I'm always asking continuously if you guys are with me. Okay, so I said the second part of our group audit is joint audit. For what I said in group audit, I said you have one group auditor that has what component auditors, right? And they are not mixing. If they ask that who audits Dangote, the component auditors cannot come and stay on the line. It is only the group auditor that will be there. You understand? But now there's another one that we call a joint audit. A joint audit involves 2 or more firms being appointed to audit a financial entity. Are you with me? So 2 or more firms being appointed to audit a financial entity is basically a joint audit. Now, we said that joint audits are mostly found in group audits. So particularly when the group acquires a new subsidiary. So let's say, for example, a company was just one before. They now acquired a subsidiary that is equally as large as them. You have that kind of acquisition. So you acquire a subsidiary that's equally as large as you. And you know that if you use your own auditor to do that audit engagement, your own auditor will not have enough information about this new subsidiary that you have acquired, right? So they will now say, okay, let the company that you have acquired auditors and let your own auditors, let the both of them work together on the audit of that particular engagement. Do you get? I'm trying to paint a picture in your mind. So do you get the picture now?
Yes.
Do you?
Yes.
So now before we even read it, because it's not long, it's just a very short subhead. So what do you think would be advantages of a joint audit based off what I have said about it? What do you think would be advantages of joint audit based off what I have said about it? Hello?
Okay, kind of
The answers
synergy.
are on this. The answers are on the screen.
Okay, okay. Oh yeah. Thank you. Yeah, but like I just want you to think about it, right? There are two companies. One auditor has been auditing company A. Company A has now bought company B. So instead of auditor, like instead of PwC now to be auditing company A and the new company B that they don't know about, company A has now said that okay, you people and our own auditor should work on this engagement together since the both of us are now one company. So what do you think will be the advantages that will come out of that? This is where everybody has to speak.
So I'll take that. Okay.
Okay. Yeah, you can go first.
Was it the brand that was
Okay.
speaking?
That
Okay,
it
let me go
allows
first.
for a smooth transition in terms of the audit.
Okay. Like so, we're saying ease of, like it makes the work less stressful. Yeah, that can be correct.
And again, we can say that the audit will be closed out on time because both auditors are already aware of what has happened in the
Their
company.
own
individual company.
exactly.
Close
So
out
they
the-
use less time. Good. Next one. Oh yeah, so I have people that were now talking before on call. People are vexed. Oh yeah, next one. Oh. Let me look how many we have. We have like they are like 4. So we have only said 2. So I've seen accuracy of like the audit work. I've talked about time. Okay. Nobody wants to say anything about costs. Hello, nobody wants to say anything about costs.
But cost should be a disadvantage, right?
Cost to be a disadvantage. Okay, so you keep your points.
Cost can be both ways. It can be an advantage and disadvantage because if it's not a joint audit, somebody else was auditing the component, the company before it was acquired. So they have, should I use the word know-how? They are used to their processes and things like that. If a new one is coming without that joint audit, they have to get all the resources together again. They have to spend more time getting the audit done. Then the bill will start running. So to saving costs also can be an advantage. At the same time, can be a disadvantage.
Thank
So in
you.
this instance, I'll say it's an advantage.
Oh, you people are too good. Sure, we should close the class and be going home. But yes, these are the kind of things that give me joy. So even if you are in an exam hall and you see of joint or disadvantage of joint audits, even if you don't remember what is pack, right? You can put something down, having thought it through. So let's look at what they've written. Like you said, cost can be an advantage and it can be a disadvantage. So let's look at number 1.
Technical expertise too. Like 2 words are better than one kind of thing.
Exactly. So we have advantages of a joint audit. Number 1, the size of the client's company may be large that it requires the service of one auditor, right? So if a company, a lot of times, auditors are overwhelmed. You see PwC or all these big 4 people saying that they were sick, they are on a job, they can't even go and receive actual treatments because the client is so large and there are a lot of things to be done. So the size of the clients may be large and it may require the service of more than one auditor. Number 2, after the acquisition of a large subsidiary, using a joint audit may help the transition process. So the person that uses the exact word, I hope you did not see this answer. But yes, it will help the transition process and it will help the auditor to basically familiarize himself with the new subsidiary. And like I said, in group audit, like I said, that what takes time is actually liaising with the component auditor. That is where a bulk of the tax and even time is being taken when it comes to a group audit. So the third one we have here is that joint audits may provide a higher level of technical expert. You guys. Is it that you are good, Abi? I kept this on the screen for too long. You should confess now.
No, I said that technical expertise from my head.
Oh, share. So now, long and
No,
short, don't they do you're already doing textbook. Okay, from next week, we'll not just do any material. I'll just say the topic and we'll start talking. But that's very good. That's very good. So we said joint auditors may provide a higher level of technical expertise than using one audit firm. You understand? You know the kind of thing where you and somebody are in a competition. You don't want to fall your hand now. Abi, even what you put noise to do, you are like, we have to follow the procedures and all of that. And this is what the standard requires. Everybody just wants to show up and show up correct. And then we have the last one. It gives opportunity to medium-sized firms to join force and tender jobs the big four will normally tend for. Sometimes, let's say, for example, it's two non-big four firms that are auditing those two companies. Because they're now coming together, of course, the company is larger, but because it is two smaller audit firms coming together, that resources that they may not have had if it was just one firm, they are able to have that level of resource and they're able to do the work more efficiently. So we're going to look at disadvantages. So, like I said, there's no cost here, but anything can be, not really anything. There's a way you justify your answer that it will still be correct. As I'm telling you that at this stage of your professional exam, it is really not about like writing what is in the pack. Yes, writing what's in the pack would, in terms of maybe winning prize and all of that. But in terms of going through the I passed through this process, they also want to see your thought process. That's why you have case study that is just one question and it's 100 mark. They really want to see your thought process. They want to see how you will solve everyday issues. So you can also put the cost and basically explain why you think it can be an advantage. So disadvantage number one, we have that it is likely to cost the client more to use two audit firms, which is very correct, right? Because nobody will want to reduce their money because somebody's coming on board, right? And there will still be time that will be spent liaising with the other auditors, so it will still be more expensive. Number two, we have possible inconsistency with two auditors. This person is saying that, no, this is how we do our secularization. So that person is saying that, no, this is not how we do it. Different audit firms, they have different kind of secularization. Smaller audit firms talk to the secularization parties by themselves. Are you with me? So they smaller audit firms will be the ones to send a mail to your bank, right? That they are requesting for bank balance. But big audit firms don't do that. It is the responsibility of the client to do secularization. So you can see that possible inconsistencies with how the joint auditors work can be a problem. Then we have the possible difficulty in agreeing on the division of work. Somebody is saying that, so it's we that came to this life to come and suffer. You are giving us all the unsexy jobs. You are giving us all the work that will not show the clients that we are working, and then you people want to be on the front line. That can be an issue. Then we have the two firms may find it difficult to work well together, and each firm may try to become the leading firm in the joint audits. If it is not clear who is the leading firm, one person will want to say, I know better. This other person is saying, see, the truth is that the moment it is not only you that is doing something. I feel like two as a pair, it is one of the hardest things in this life, because you can know what your intentions are. You can know the reason why you are doing a certain thing. But bringing another person to that state of mind that this is the reason why I'm doing XYZ can be very, very difficult. Now we have here that the key to success, to a successful joint audit, is communication between the firms, which include joint planning meetings, regular discussions between firms at all key stages. We now said the meetings and discussions should be fully documented. So they're trying to tell you that actually, because it is more than one firm, the only way a joint audit can work in this life is actually with intentional communication. Like for that period of time, you and the company that you people are working together, you people are literal besties because, you people have to communicate along the way. Okay. So, so let's move on. Now we have documentation. Now they said in addition to the requirements of ISA 230, which is audit documentation, ISA 230 is audit documentation, right? That talks about audit files, permanent and current audit files and all of that. That's another topic. They said the group auditor is also required to document, number one, analysis of components and their basically like all the components, like ratios, things like that. Number two, is supposed to communicate the type of work that is performed on all the components. Oh, in the terms of us doing this work, these are the kind of things that we did. It's supposed to document the extent of the group auditor's involvement in the work. So you want to say, oh, this component auditor provided us with XYZ, this component auditor provided us with XYZ, but not that you are relying on what the component auditor provided to you, or not that you are saying that what the component auditor provided to you was now the basis for your decision. No. Also, we have written communications between the group auditor and component auditor are supposed to be documented. See, in our accounting, what do we say? Anything that is not written was not agreed upon. You understand? There is no evidence for anything that was not written. And as I tell you that, even if somebody sends you guys have a call, you are supposed to send the person an email and say, following our conversation about XYZ, right? These are the things that you require me to do, and I'll proceed to do them now, because communication or keeping documentation of communication is very, very important. Okay, somebody needs to, I'm somebody's child. Somebody should read communication with group auditor for me, with group management. Somebody should read it for us. Hello?
Communication with group management.
Okay.
The group should make group management aware on a timely basis of the following matters. The first one, material weaknesses in the design or operating efficiency of group-wide controls. Second one, material weaknesses which are significant to the group that the group auditor has identified as components. The third one, material weaknesses which are significant to the group that component auditors have identified as components and have brought to the attention of the group auditor. The fourth one, any fraud or suspected fraud identified by the group or component auditors.
Okay, that's actually, thank you very much.
Number two and three seems to be almost same.
So I will break it down. Now, first one is material weaknesses in the design and operation efficiency of the group. So I'm trying to say that as a group, I think that you people need to actually work on your internal control. This thing that you do, that one person is the one that follows a transaction from the beginning to the end, right? You know how in companies now, the person that sells is not supposed to be the person that records. It's not supposed to be the one that banks. It's not supposed to be, you understand? So if we are seeing that across your group, this particular financial control is something that's like the weakness in that financial control is spreading across the whole group. That's the material weakness in the design or operating efficiency of the whole group. Number two, material weaknesses which are significant to the group that the group auditor has identified at a component. Okay, so let's say, it comes across this installation that I gave in the first one. So a bad behavior that is in the group, but we're also seeing it in the components. Are you with me that, oh, this thing, we have traced it in your group company, but it's also happening in your components company. Number three is now material weaknesses which are significant to the group that components auditors have identified and have come as components, and they have brought it to the attention of the group auditor that it is not even me that noticed this thing. Your components auditor that audited you also told me this problem. Let's say, for example, we have things like management bias, right? Managers wake up and recruit. It's not recruiting time, they just recruit. Their uncle, sister, brother, Keneko has finished school, so they feel like it's a good time for them to put them inside work. You understand? And let's say the component auditor is the one that has told the group auditor that this is a problem. So the second one is the group auditor is one that identified that is a problem. Are you with me? Happening at the components. The third one is the component auditor is the one that told the group auditor that this problem is happening, but the problem also exists in the group. Similar, but they are not the same. Do you get? Okay. Then the fourth one is any fraud that has been identified by the group. Fraud is actually a serious thing. Hope you guys know that fraud is not a direct responsibility of auditors. Like identifying fraud, hope you know, is a secondary objective, because the essence of audit is to issue an audit report, not to identify fraud. If in the course of the auditor doing his checks, he identifies fraud, definitely he will tell that to management. But the reason why you audit is not to go there and be finding fraud. Please note that. That's a chapter 1 topic. Okay? So somebody should read this last part for us. Communicating with those charged with governance. Hello?
Communication with those charged with governance of the group. The ISC 600 requires the group auditor to communicate the following matters to those charged with the governance of the group. 1. Type of work to be performed on the financial information of company. The group auditors plan improvements in the work to be performed by component auditors.
Okay.
Third one, any concerns quality of any component auditor's work. And the last one, any limitation audit, e.g., the lack of access to information.
Okay. Then the last one is what? The last one is what? Any fraud. Can you see? Any fraud or suspected fraud involving the group management, component management, or employees with significant roles, group-wide control, where the fraud has resulted in a material misstatement of the group financial statements. So this basically tells you that who are those charged with governance? They are different from management. Those charged with governance are your shareholders, people that have put down money, right, for the company to run. So you're basically just going over, like you're reporting yourself to them. These are the people that you even owe explanation. Do you get? That's why there's details in what you're communicating with them. So we have that, the type of work to be performed, the group auditor's planned involvement in the work to be performed, concerns over the quality of it, saying that this particular component auditor, we feel like you people should change them, or you people, they need to be carrying out more kind of analysis. We found this out. All those things need to be communicated to your shareholders, because the shareholders are the literal owners of the company. They are those charged with governance. Then we have any concerns, any limitation in the group. Let's say they're saying that a particular component, there was a failure in their ERP system, and they don't have access to certain informations anymore. Are you with me? So definitely they need to communicate that with those charged with governance. And the last one is any fraud or suspected fraud. You know, the reason why you see fraud and how they are always saying that, like always communicating fraud is, you know, as you did maybe from AAT or even at skills level, we have what we call NOCLA, N-O-C-L-A, N-O-C-L-A-R. So NOCLA is non-compliance with laws and regulation. There are some things that, you know, when it comes to the principle of confidentiality, you definitely should not be disclosing your client's information outside. But there are some things that are outside the scope of confidentiality, where if it is affecting the general public, right, you as an auditor have the responsibility to even disclose that information to outsiders. So that's why when it comes to fraud and all of that, it's usually more escalated. Now, let me stop sharing my screen. There's something that is in group audits that is not here, that I believe that is very essential. So I will just look for it. But before then, I sent an analysis of the past question. This class would obviously round up by 12, like I said last week, because I have... Hello?
Yes.
Okay. I said that there's something that is supposed to be in this group audit, right? That is not, it's not a lot of things, but that is not there, that I feel like should be there. So I wanted to search another material just to confirm. Not like a material, like another pack summarization. So let me quickly do that. I will share my screen and okay, so this is okay. Okay, so but before then, I said I shared the analysis of the, so I'll proceed to share my screen now. Just something that is usually asked. It's not here, so Okay. Everybody can see my screen now, right? Can everybody see my screen?
Yes, we can.
Yes.
Yes.
Okay, so what I want to show you guys. Okay, this is it. This is it. So, we already did planning and controlling. Like I said, it's not something very different. This is just working with component auditor. Okay? Now, a component, like is just basically a subsidiary. You understand? Now, there are 3 different categories that a component is supposed to have when it comes to a group auditor's point of view. A component can be significant, like a component can either be significant or non-significant. Are you with me? What can make a component significant? It can be significant because one, it is financially significant. So let's say a company that have more than 50%, right? That they make up more than 50% of the total group. Definitely they are significant. So they are significant because of their financial significance. Number 2, it can be significant because of the risks of material misstatements, like that particular component. If the risk that is embedded inside that company, if it fully materializes, it can affect the whole group. That's the second reason why a component can be significant. And then the third thing is a component may not be significant. So we have significant because of financials, like a component can be significant because of financial significance. A component can be significant because of the risks of material treatment or material misstatements, and a component cannot be significant because it is not significant. Let's say 20%, all those investments in associates. Yes. So now, they now said for each type of components, there are different kind of work to be performed. For each, I'll send the screenshots to the group. For each kind of component, there are different type of work to be performed. Now, for the first class, which is a component that is significant because of its financial significance, the auditor will work with that component using the component's materiality that has been set. So let's say, for example, if the FS have been given to the group auditor and the auditor is seeing something that has a 20% significance that is very important, but they are not able to, let's say, for example, the bank, right? The bank balance has a 20% significance to the total value of the FS, but their banks have refused to confirm the bank balances. The group auditor cannot make it fly, because in relation to how material that component is, that particular matter is important and it can affect the opinion of its user. Are you with me? So if a component is significant because of the financial significance, the group auditor will interact with that component on component reality. Second, if a component is significant because of the risks of material misstatement, the group auditor should use specific audit. Oh, why am I hearing myself? So we said the group auditor should use specific or specified audit procedures to address the risks of material mistake. That's something that they mentioned in the other material, where they were like, if a particular component has risks of material misstatement, the auditors are supposed to develop other audit procedures. Are you with me? Then set up a communication with the component auditor that, this particular risk, so how do we intend to mitigate against this? What are the intentional efforts that we are putting in place to stop this risk from occurring? You understand? How are we sure that this going concern problem is not going to be the end of this company? So those are just like additional or specified procedures that the auditor or that the group auditor has to put in place. Then for the third one, if it is not significant, it would basically use analytical procedures at the group level. So analytical procedures are basically one of the ways that we generate audit evidence. So you will talk about analytical procedures in your audit evidence. So analytical procedures are all the procedures that the auditor use to check the plausible relationship, to check for the plausible relationship that exists between financial and non-financial data. Okay, so there are 2 things I want to send to your group. Okay, let me just stop sharing my screen now. Okay. Wow. Can you still see my screen? No.
What you just shared on the significance of the components
Yeah.
regarding the group audit, the number one and number two, it seem to be related. They seem to be related. I
Yes.
don't know whether you can. Are you sharing that note with us again? Because
Yes,
that
I want
number
to
one
share.
and
I want to
yes.
share the actual notes now. So I want to share it to the group. So I'm sharing this. Then I'll
Okay, you are going
proceed to
to also
share.
send it to the platform.
Yes. So I'm proceeding to share this and share this. You should have gotten the notification already. Okay. Have you gotten notification already?
Why I'm saying they are related, if we look at
Yeah.
number one, we said individual financial significance. And the second
Yes.
one is significant because of likely significant risk of material misstatement. So even at that individual level, if there is
Mm-hmm.
significant risk of material misstatement at the individual level,
Yeah.
and that component, maybe the contribution to the group is also significant, then what is happening at that component level will
So
affect the group.
yes. So that means that what is happening, like there are two bases why you cannot leave that matter. Right? So if a component is financially significant and there's also a risk in that component that makes that is you know sorry.
So number one and
Okay.
number two will apply at the same time, depending
Yes.
on what is affecting the group.
Yes. So they're just basically saying that, you know how you do group accounts now? We have some things that we call investments in associates, right? That you just do one small
Yes.
calculation and then you make a conclusion and you add it to like the what they call that thing, like post acquisition profit, or something like that. So that's the same way a component may not be significant. So when a component is not significant, you are basically doing just your analytical procedure. What's like basic analytical procedures will be your ratios, your trends, you understand, and that's what you are using as a basis for your conclusions, right? In that particular component. But now they are trying to say that there are some components that let's say for example, there's no how that you do the FS of Dangote that you want to disregard.
Say cement.
Yes.
If the
Yes.
component is not very significant to the group, then this review will now limit itself to number one, which is the individual financial significance.
So
And therefore,
let's even use an example. So Dangote now, there's no how you are doing the FS of Dangote that cement is not a financial, like it's not significant because of its financial significance. Are you with me? It is impossible. Now,
yes.
the refinery is financially significant, but it is also significant because of the risks embedded in it. Let's say, for example, the one that all of us are aware of, the political risks. Are you with me? So you can see that the refinery is cutting across two things. Because right now the reason why the refinery is even significant in terms of finances, it's not because of the money that's coming from the refinery. It's because of the cost that's gone into the refinery.
Correct.
Do you get my point of view? And
yes.
But the reason why we'll be considering, let's say, a particular risk in the refinery occur, maybe a risk of close and seizure by the government or something, is because the happening of that particular risk poses a serious threat to the Dangote group as a whole. Are you with me?
Yes.
Why? Maybe something like Dangote juice. You know, he had juice. Dangote has done juice, so my guy has even done Maggi. So let's say Maggi, maybe of Dangote is you obviously have like financial people. So I don't want to be that the company just closed down. Maybe they sold it out or something like that. Maybe they are still getting some kind of income, right, from that subsidiary. You understand? It will be treated as a non-significant component. So they will basically just do the analytical procedures and keep it moving. Are you with me?
Yes, I get it. Yeah.
Okay. Now, the last thing I want to talk about, I don't even know if this should be here, but I don't know if this should be here. But the last thing I want to talk about is what we call a letter of comfort. Are you with me? So it is not typically in your pack. It was just a one-off diet that it was asked, right? Now they'll tell you that, okay, let's say, for example, a component is significant because of the risks of material misstatement. Are you with me? Let's say, for example, we have identified a going concern problem. Do you get? And the group auditor is saying that this is material. I want to consider it in my audit reports. It's so material that I think that it is even going to affect the type of audit reports. You know, I'm trying to jump now, but when you do audit reports, there are different types, or basically like the opinion paragraph. So it's so material that it's going to even affect the type of audit reports that I may give these clients, right? And the parent company is saying that, okay, no problem. We have heard you that this particular component, they have a problem, and this problem they have is very material. But we're telling you that in the event of this particular risk materializing, we will cover. Are you with me? We will cover it. We would provide them with the needed financial injection that they need to stand as a company. The group auditor will simply request what they call a letter of comfort from the parent company. You understand? Hey, do I still have a class?
Well, yeah.
So do you understand what I just said?
Yes, you just said that the letter of comfort will be
Yes.
requested from the parent. So the parent will be the one that will issue that letter of comfort, sort of
Yes.
to indemnify whatever that has been observed as lapses or gaps
Yes.
regarding the component or the subsidiaries. Yes, I got it.
Yeah. Very good. Have I heard Prudent Jerry's voice? It's only when he was doing background noise. That is when I heard his voice in this class. Zainab Ibrahim, good afternoon. Have you spoken to us today?
Yes, I have.
Okay.
Hello.
Mr. Prudent, I've
Good
not heard your
afternoon.
voice. I only heard your background noise. Have you spoken to us today?
Yes, now. I've been saying yes. But
You have been saying
this
yes.
yes
Okay.
now. I've been explaining yes
Say,
now. But
say,
this okay.
say that yes in the exam hall too. I don't teach people that fail. Oh. I
No,
don't do it.
I will not fail. I'm not gonna fail now. I will not fail. So this
Okay.
I want to know this letter of comfort
Yes.
actually is obtained by this thing parent company.
It's not obtained though. It's the group
Is
auditor that
given
is just saying, yeah. But it's the parent company that has to give it. Basically saying just
yes
like
now.
uh,
Okay. The group auditor will ask the parent company to issue them this letter of comfort
yeah.
uh, for the reason, let's assume that one of the subsidiary
Mm-hmm.
is not you know is not profitable enough this time around. It's not profitable, and the situation at hand may lead to the closure of that subsidiary. So, but other subsidiaries may want to sustain this thing that the airing component company. So instead of closing it, the parent company we insist that they will sustain the component company that wants to fail or whatever. So
Yes.
now the auditor will ask them to issue them this letter of comfort for them to be
Yeah.
at the same page, Abby.
Yes. Yes.
Okay.
So yeah, that's basically it. So that's what we want to do today. We have done group audits, we have done joint audits, and we have basically talked about how, like, what are the criteria that are required for a component to be significant or non-significant. Okay, so I will just highlight the past question again. So here, just in case. So if you look, if we look there, I don't know if I should share my screen again. Let me just share it for somebody who say, that girl, she will just teach us. She will not show us that this is how they ask the question. So let me just share my screen because we still have a bit of time. Okay. So if you look at group audits, right, it has come out a total of 5 times. Let me get the most current version of this analysis. I'm coming. Just give me a minute. Okay. I just wanted the more current version. I think I will even do a screenshot of that and send it to the group. Okay, so let me just go past my screen again. Yes, so because I think you had an additional diet sort of. Okay, so group audit has been asked 6 times. Can you see the line that is this is just an analysis of the past questions. So group audit has been asked 6 times. You have the last diet, I think November 2023. That's last diet. It was even asked in question 2. No, is it question 2? Let me just. Yes, question 2. So we have May 2022 question 1A. We have November 2019 question 2, November 2018 question 6, May 2017 question 6, and November 2014 question 4. So at least 6 diets still shows you that it is a question that ICANN is still interested in. So what I would advise is that you simply go to your, let's even do one. Let's do last diet. I think I'll just highlight the past question. Well, nobody has sent analysis of past. So we're supposed to have like a compilation. Okay. I'm sending this to your group now. So this is like a compilation of all your AA past questions. So let's just go to last diet. So you know how your past question now is all the cost, but this one is just AA put together. So definitely will help you reading. Okay, see the question. They said I would resend it. So let me just send it to your group because okay, sending this first. Okay, why am I resending this though? Mr. Prudence. Anyway, I've sent it. So see the question. They said, prepare a list of items to be sent in your letter of instruction, 6 marks. What are the things that should be in our letter of instruction? Hello. What are the things that should be in our letter of instruction?
There are many now.
There are many
Ethical
now.
ethical requirement is one of them. The work and the
Yeah.
purpose of the work to be done.
Don't put all your points together. Number one, the work required. Number two, the purpose of the work required. Number three, the ethical requirements. Okay. Number four, significant risks. Abi.
Yes.
Number five.
Yes. Okay.
Number five. We have not left class, so. Number five. Everybody has gone quiet. Should be have sent the material. You can simply open it now.
Compliance requirement, I think.
Yeah, a compliance requirement. Number six, a letter of cooperation. Abi, request for
Yes.
cooperation. Okay, the Lord is good all the time. Okay. Then the B part, they said, for the purpose of ensuring that financial statements are properly consolidated, prepare a document outlining the audit procedures for TC and Co. So that's not even like a direct question. Now they said evaluate the nature of business. This is also audit planning. So you can see it is the 6 marks question here that is for group audits. Okay, so let's also check November 2022 question 1A. You can actually, since I always tell people that it is when you're inside exam hall and you look at answer that you are wrong. Every other time you look at answer before you are inside the exam hall, you are correct. So never be scared to look at the question, even if that's not the topic you have treated, and go to the answer and read it. Oh, what did they write here? Because the total that is teaching in audit planning may not get there because they may not list it as part of the questions under audit planning. But it's definitely a risk question, so it falls under that category. Okay, so let me just do the last one and wow. See you. November 2022 question 1. Let me just send it to your group. They said evaluate the justification of a joint audit. Sweet question. Imagine that you open your exam question and this is what you are seeing as number 1. I've sent it. They said evaluate the justification of having a joint audit. So when they say evaluate the justification,
we've considered that when we're looking at the advantages.
Exactly. That's it.
The advantages of joint audit. We looked at it. I think we looked at 4 or 5, between 4 and 6 advantages, I think.
There are 2 questions though. They're asking for the advantage and disadvantage.
So we could add costs. Okay, wait though. Okay, yes, evaluate the justification or otherwise. Yes, so thank you. That's a very good thing to note.
I'm not saying
so they're asking for the advantage and the disadvantages. Yes.
I'm not saying the question. It's what you're announcing that I'm reacting to.
I've sent the question to the group. But wait though. So when you read this, they are saying that wait, do you want also that are telling you to pick a stand? I don't have too much time. Would have read this. I have another commitment for this time, so I have to.
Which year question are you reading? Are you reading out?
November 2022 question 1. This year. I've highlighted it on the group.
I feel we have to answer based on the case study. Because they gave us a case study and they're saying evaluate the justification or otherwise of an entity having joint auditors. So I think after reading the case study, then we should now pick a stand, basically. I don't know.
Yeah, that's what it should be. Yeah, that's what it should be. That's correct. And then they said, following these concerns, present options available. So I want to read that what will be here will be advantages. Then following the concerns, they are saying what are the options. So that will also be in the case study. Then they said discuss the points which the chairman needs to base his decision on according to standard acquisition process. Now, are you seeing where CR is coming in? Are you seeing where they can ask you standards? So now they're asking you that how should the chairman make his decision based on normal acquisition process. Okay, thank you everyone for your time. We'd have to stop the class here. If you have any question at all, maybe when you go to any of the past question, you have any question, please feel free to just reach out to me.
Please, can you give us an idea of what the next topic is?
So if I am the one that is coming to class, the next topic would typically be internal audit and outsourcing. That's if I am the one coming to class. I've already sent the analysis, like the parts that I am taking and the parts that the other lecturer is taking. I think I sent that last week. Here. So
you did, but like the queue is not being exactly followed.
Yes, it is not. It is not. Okay. Thank you very much. Please, I need to sign off now.